Good morning, everybody. This is Patrick MontesDeOca with the live trading room. This segment sponsored by the Equity Management Academy. What I would like to do is to first of all make the special announcement that we're having a special guest come to the room live on June 25th at 10 a.m. Pacific time. Mr. Rick Rule, President of Spread Global Assets, will be in the room to answer any questions that we may have. I'm very honored to have Rick, as Rick is, in my opinion, one of the top in the business. He has a proven track record, basically, and a very, very successful one, and I'm very pleased to have him join us here in the live trading room. What I would like to do is move right into the report that was published here last night with regards to the daily algorithms that we are trading in the room today, and we're going to take a look basically of what's happening here in the gold and the silver market in particular, and then we're going to be taking a look at a recent trade that we have opened in crude oil and show you how this tool can be flexible to apply to basically almost a universal way, a universal application. When you become a subscriber, basically you receive the password that you use to go into the members area, and here in the members area you have access to about 5 reports that we publish. We publish a daily futures and stocks reports that we cover gold, silver, crude oil, the Russell 2000, soybeans, Nugget, JDST, USLV, and UCO that we use basically to manage risk when we're trading away from the futures markets. We have an application that we're using that's working very effectively for us, and we want to share that with you as these markets continue to confirm what I believe is a great opportunity to trade actively. But one of the things that I focus primarily is in managing risk. And for most people, trading in the futures contracts is highly risky with this kind of volatility, particularly in the precious metals area, in gold and silver, for example, or in crude oil, or in the Russell 2000. Every futures market carries a substantial amount of risk. And what we're doing here is we're coaching people. We're using the room to educate traders, basically, on the application of this proprietary tool that is called the VC Price Momentum Indicator. This is an algorithm that you get the night before that prepares you for today's activity. And in this spreadsheet that you see here, posted in the room by 7 o'clock every night, Pacific time, you have a view of what to expect the following trading day. In this case, today's trading. So what we do here is when you get this information, we post these algorithms here in the room. As you see here on the left chart, these are the algorithms to day trade in the gold market today. And this algorithm tells us very specifically if the market comes down to 1178, buy one, 1171, you buy another one. And these lines that you see here are representative of those signals that are very specifically directed in terms of what to do and what price to buy it at. The algorithm, when it is presented in price at these levels of the blue levels, as I call it, it gives you the highest probability to buy the market. And on our previous video report, we announced that basically we were looking for the possibility that the market may come down to these levels of 1178 to 1171, which offer tremendous synergy and tremendous confirmation of basically a value level or a demand level that could be developed. And additionally, in addition to the daily algorithms, uh, if you go to your website here, you will see on the right that there's a weekly futures gold and silver report. And for the purposes of trading in basically the um, gold and the silver market, what we try to do is to find the harmonic timing relationship between the daily algorithms that are produced as well as the weekly algorithms that are produced. And we're finding that as we speak, basically, we are experiencing a tremendous amount of harmonic timing because as you can see on the left chart, the uh, daily algorithms have come down to basically that buy one level of 1178 and that B2 level of 1171, which is indicating a major buying area. And the weekly algorithms very specifically are telling us to exit our shorts at the 1179 to 1159 area. And so you can read more of the summary basically of the algorithm here, and you can see that it gives you the components that we use. And so just to follow the signal here, the June gold futures contract closed on Friday at 1200. The market closing above the 9-day moving average, which is one of the components that we use on the weekly basis of 1191, is confirmation that the weekly trend momentum is bullish. But it also tells you that a close below the 9-day moving average of 1191 would negate this bullish trend to neutral. And this will be on a weekly basis. So we're in this week right now where this activity is taking place, and it's a perfect time to show you in real time how these signals basically are produced and how we coach you based on your experience in terms of how you can apply this information for your personal benefit. The weekly momentum indicator with the market closing below the VC weekly price momentum indicator of 1193, it confirms that the price momentum is bullish. And so coming into this week, the close of the market above the pivot point of 1193, or the metrics for the week, is confirming that it's bullish. But if it was to close below that for the week, and that will be on Friday, on the close on Friday below 1193, then it would negate this bearish signal to neutral. So we're in this signal as of this week. We're below the signal, and this tells you that coming down below 1193 could come down basically to the 1179 to 1159 area, and it tells you very clearly, look to take profits on shorts into corrections at the buy 1 and 2 levels of 1179 to 1159. And so this is the tremendous harmonic timing that we're finding right now as we speak, that the gold market has kicked in a weekly swing buy signal of 1179. Basically, the area to accumulate or accumulation is 1179 to 1159. And what we're doing is, if you cannot carry a futures position, then we're looking at these incredible instruments like the ETFs, JNUG, which are basically 3 times the velocity of the underlying instrument, and in this case, which is the GDXJ, which is the gold mining shares. As we feel that if the price of gold moves up, as we expect that this is going to happen over the next few weeks, then these tremendously undervalued assets like JNUG, Triple X Velocity can produce some phenomenal returns. Please be advised that these ETFs are very volatile, and that unless you are capable of handling the risk and the volatility, I do not suggest for you to take these instruments or trade these instruments. These instruments are geared primarily for aggressive building of equity and for traders that can withstand the volatility of a futures contract or a triple X velocity ETF. So the application that we have is basically one that teaches you, coaches you, empowers you to use this algorithm to build a profitable position, whether it be for day trading, swing trading, or position trading, as basically we are doing. So once again, the silver market and the gold market have kicked in major swing buy signals here in using the weekly swing momentum indicator that we have for the gold and the silver market. One of the things that we have here basically is a current live signal that we're using as an example, that the application is basically universal in the sense that you can use it as we're using it here to trade the crude oil market in a live signal. And basically in the room here you see the price that came right into that sell 2 level as anticipated yesterday. We produced this information for you the night before. We prepared you basically for you to prepare in order to enter into the market if the crude oil level came down to 58.69, 59.48, or if it went up to 61.41, it says here sell 2, or 60.84. So the crude oil market basically has defined for us what appears to be a short signal, and the first bar here, as you can see, activated the neutral zone of the setup. The next bar closing below activated a short signal, and we went short basically, as you can see here at 61.2250. That is after the market touched the code of 61.41 and then closed below, which was the trigger point. Automatically, once the trigger point is activated, the stop is activated as well, and your stop basically is the level or the code above the signal produced, in this case 61.41. So your signal was triggered at 61.2250. Your stop is 61.41 on a closing basis at any time in the next 15-minute bar, using the 15-minute bar. If it closes above, you'll get out, and whatever the close is, it will give you basically your closed out loss position, your stopped out position. Well, immediately, it also brackets the target, which in this case is the next level below. And that is, the first target is 60.84. If you're using multiple positions, you can put another order to get out at 60.05. If you're doing multiples, the lower levels can be used as basically the methodology here is a reversion to the mean. In this case, the daily algorithm VC code of 60.05 is the mean, and we expect that the market will reverse from 61.41 to the code of 60.05. This signals work 94% of the time. Once we publish or once we basically execute the signal here in the live trading room for your benefit, for your account, we are not brokers, so we don't get in the trade and the conflict of the trade. We don't benefit from commissions. We don't benefit from brokerage, but we do benefit from you applying this information as we are, so that you can accomplish the results that we are getting in executing this live information, this live trading signals here in the room. And the bottom line here, ladies and gentlemen, is that it is not really important in terms of how great of a trader I am in the application of this, because in all fairness, all I'm doing is executing a methodology that's mathematical in the application, and I'm adhering to the discipline of following the signals. And the reason for it is because the swing signals in particular will produce 93% profitable trades. Every trade has a risk-reward ratio of 3-to-1. So the swing trading signals are giving you 93% profitable trades, 3-to-1 profitable trades. And you can see also that the daily day trading is running at about 63% profitable trades, 3-to-1 risk-reward ratio. Using this methodology here, we're up 117% year to date, based on real live trading signals, not hypothetical, not backtesting it. Make 12%. You can review this information by simply clicking on imatotrade.livesignals.com on your own time. What I want to show you here is the tremendous accuracy that this algorithm produces, particularly for the swing trades that you see here. Have produced just a phenomenal return. These are the equity curves based on real live trading signals. These are not back-tested signals. The silver market, same thing. These are real live trading signals executed here live in the room, not back-tested. You can click on the monthly returns and you can see the tremendous results that we've accomplished. 14,880 in January, February, 22,600, 22,600, March, 6,620, April, 6,920. That's 3 months profitable in a row, averaging about 9 or 10 trades a month, producing these returns. For the month of May, up 7,185. We do take losses, as you can see, but you can see also the resilience of the system and the ability to come back right away, which is what you want to see in a trading system. And for the month of June, we're up so far $1,555. Day trading, you can also look at the trades individually, and you also can see that we have available all the trades that we have done in the room, documented with time and price sales, so that you can verify that this trade did take place during this time frame. Or you can look at a chart basically and confirm what we're documenting here in the room. You can see that I use primarily a one contract to show you that these profits can be accomplished in using one contract. And so the same methodology we use for position trading. So we have day trading, swing trading, and position trading that basically we apply to all the different parts of the market in terms of maximizing the profit potential that it's given us during this particular time frames. As I said, we do take losses, but you can see the resilience of the system and the ability to come back right away. Particularly for swing trades, you got to adjust the risk. Particularly for position trades, you got to adjust the risk according to your individual account. And that's what we teach you here. That's what we coach you. We teach you formulas that we are using ourselves in here, that you can very simplistically and effectively apply them to your own personal trading. Once again, we are not brokers. We don't handle your account. We teach you a tremendous market intelligence that will give you the probabilities for you to benefit by this as much as your personal situation will allow you to do. If you would like to discuss in more detail the application of this algorithm in other markets that you may trade, as I said, the application is universal. What we do here in the room is we are showing you what can be done with these markets that we're trading, but we have very successful traders now that are part of this methodology that are beginning to find themselves and are beginning to trade these markets very successfully outside of the markets that we're trading here in the room. For any information, any more information regarding any specifics, please feel free to contact us at 805 area code 418-1744 direct, or you can use toll-free number 877-733-1511, or you can email us at support@ema2trade.com. That's EMA, the number 2trade.com. Once again, this is Patrick MontesDeOca. I thank you for the opportunity to share this incredible intelligence with you, and I look forward until next time. Until then, good trading. Be well. Talk to you soon.